All right, good afternoon, everyone. My name is Tyler Langton. I cover the precious metal stocks here at JP Morgan. Up next is B2Gold, and from the company we have Clive Johnson, the company's president and CEO. So thank you for joining us, Clive. Greatly appreciate it. I think Clive is going to start with a brief introduction of the company, and then we'll sort of hop right into the Q&A. So with that, I'll turn it over to you, Clive.
Great, thanks, Tyler. Thanks for including us in your conference. Just a very brief overview for those of you that may not be familiar with the gold sector or B2Gold. B2Gold is a company that was created just 13 years ago by myself and some of the other management group from a company called B2Gold that had been very successful over 20 odd years and moving from exploration to production into interesting places like Chile, Russia, South Africa, etc. So with the success of B2Gold, which was taken over by Kinross in the $3.5 billion transaction, 2007, we thought, let's see if we can do it again. So we created B2Gold at zero, and over the last 13 years, we've been very highly successful in doing accretive acquisitions of developed projects and building our gold mines. We have a great construction team that is an in-house team, and we've had really good exploration success around the mines and other places. So we've really grown the company from zero production 12 years ago to 1 million ounces of low-cost gold production this last year, and looking at similar this year. One of the lowest cost gold producers in the world, highly profitable. We are debt-free, and we are paying one of the largest dividends in the gold space. So we've been able to accomplish a lot over the last 12 years, but we've also done it with a real commitment to responsible mining, and that's something we're very proud of. You know, we've been doing a lot of ESG type of projects before there was a fancy title for things like ESG and CSR. So that's been a driving force forever, wherever we go around the world. And I think the corporate culture is worth mentioning because it was the same in the BEMA days as it is today in the B2Gold days. And that is to go around the world treating people with fairness, respect, and transparency. I call it an extension of the Canadian culture. But I think through that, we've done extremely well, extraordinarily well, including recently during COVID, when we managed to keep all our people safe and keep working in these countries that critically need our business. So highly successful company in exploration, project construction, operations. We have one of the top safety records in the world in our projects, once again, despite the additional challenges of COVID. So we're very proud of what we've been able to do. And this is a company, unlike many others, that is, the founders of the company are still very involved, including myself and others. And I think that's one of the reasons I like to think that we've been successful. You talk about skin in the game. Well, we founded this company. So we're looking forward to the future and continue to grow. We've got another exciting project. So I think with that overview, I'm happy to answer any questions you have, Connor.
Perfect, thanks. Maybe just starting with the production profile. I know sort of you recently had your sort of the annual general meeting where you had a presentation, and with the profile, sort of previously you had a little bit of a sort of a dip in production starting in 2022, and now it's kind of you've got some sort of modest growth from 21, 22 to 23. Could you maybe just walk through a little bit about sort of what's sort of driving sort of that improved outlook at the assets, specifically I guess
Sure.
Fekola, where most of it's probably from.
Sure. The three producing mines in the company are the Fekola mine, which is located in Mali in West Africa, and the Otjikoto mine, which is located in Namibia in Southern Africa, and finally the Masbate mine, which is located in the Philippines. So those are the three mines that made up the vast majority of our 1 million ounces a year profile. And then anytime you're mining and sequencing, particularly in open pit mining, you'll go through sequences whether you're stripping a little more waste and a little less ore is being trucked to the mill at certain years. It's all about mine planning. But so we make these mine plans over 5 years, and then we do detailed plans. So now we've gone back and done more detailed plans for the next 5 years, and it's changed quite a bit from last year where we did have a larger gap. But I think that we're looking right around a little bit just below for the next 5 years, just below that 1 million ounce a year level. I think we'll beat that. I think that there's a slight dip in 2014 if you look at our presentation, as you mentioned, but we do not think that will be reality when we get there. The Fekola mill, which is our biggest mine, produced over 600,000 ounces of gold last year, very low cost. We expanded that mill last year so we could go from 6 million tons a year capacity to 7.5 million tons a year. The second time we've expanded that mill because it's such an extraordinarily successful project with more and more gold being discovered. But in actual fact now, we're not at 7.5 million tons a year. We're somewhere around 8.5 million tons a year. So that capacity alone, if that continues, will increase the production through the ability to put more tons through the mill, therefore produce more ounces of gold. We also have a new discovery that's right next door to the Fekola deposit called Cardinal. And so far, there's about 500,000 ounces there in a resource, but it's wide open, and the drilling shows it's getting bigger. But the most important thing there is we're starting to truck that ore already to the Fekola mill as well. So there's further upside there. And finally, about 20 kilometers to the north of Fekola, we have an area that we call Anaconda, which is a couple of licenses that are showing some really good recent drilling over the last few years, indicating a significant gold resource there of about 800,000 ounces of gold. Now, one of the two claims there, not to get into too much detail, but one of the two claims there is called Menankoto, and it's been in a dispute in terms of the ownership of that, and we're dealing with the government looking to clear that up. We think under Malian law, we have a right to an extension of that. So, but in the meantime, though, Bantako, the claim just to the north of Menankoto, hosts significant gold discovery, and it looks like it's getting a lot bigger. We would be looking over the next, starting potentially as early as the middle of next year, subject to permitting and infill drilling, we would be looking to start trucking the soft ore from Menankoto 20 kilometers down to the Fekola mill. Because it's so soft, it can go through the mill very easily, and once again, add to our throughput. So that's not in 2024, not much for Cardinals in 2024. So I'm talking about the middle of next year being able to further increase throughput, maybe in excess of another 50 or 75,000 ounces a year by using the Menankoto ore. Ultimately, we think there might be another Fekola-sized multi-million ounce deposit in that area, 20 kilometers north, and we'll be hitting it hard on the Bantako claim while we sort out the ownership of Menankoto. So there's a lot of growth there in terms of filling in that gap. And then, of course, we'll talk about Gramalote. I think you have a question on that in Colombia, and the other project in Burkina Faso when you get to it.
Yeah, no, that's perfect. So I guess, right, as you mentioned, sort of the, in those slides, you did have sort of the dip in 24. But as you mentioned, those didn't include, the assets from Menankoto, I guess the underground extension, and maybe I guess,
Right.
And especially Chiakay, maybe just, starting with Chiakay, I guess could you talk a little bit about, like you're in the process of updating the feasibility study there, sort of how that could potentially sort of contribute in some of, sort of the issues with, sort of costs that you had in the past, and, sort of, what you're trying to sort of resolve, at this point with that.
Sure. I mean, Chiakay represents an intriguing opportunity. We acquired it several years ago on a friendly takeover, a company called Volta Resources, who had done a good job of exploring and doing a feasibility study. But the problem was that it back several years ago now, it needed a higher gold price or exploration success, further exploration success, or some other major change in costs to make it economic. And that was around, we were looking at 1350 gold, I think, back in those days, et cetera. So we acquired it with very, very cheaply, very cheap acquisition, on the belief that we might be able to do certain things working with the government to make it more attractive. And also, of course, we did somewhat believe that gold is cyclical, but we don't tend to pay up for anything that we need a higher gold price or exploration success in our acquisitions. But this acquisition was frankly so cheap that we decided 4 million ounces in Burkina Faso with some exploration upside. We went for it. So right now we've been updating the feasibility study, and there's some interesting opportunities because fuel is very expensive in West Africa, and the trucking of fuel, and taxes are very high in fuel. So we've been looking at natural gas alternatives for the plant, and of course we are one of the world's leading companies in solar. We built a 30 megawatt plant in Namibia several years ago, which was a great success for the Otjikoto mine, and now we built a 75 megawatt plant, and it's just being completed in Mali. That's really helping reduce our carbon footprint and also lowering costs of the Fekola mine just next door in Mali. So clearly that's another alternative for looking at Chiakay, those various alternatives. So we're just trying to figure out the magnitude of those. We want to talk to the government about perhaps taxation on natural gas, because we think there's a great opportunity for the country to see more mines built. And the bottom line is this is a 4 million ounce to the gold deposit, then you don't see a lot of those in the world that are getting near the development stage. Bottom line, we'll have the feasibility study done, the updated study in the third quarter, and we'll review it to see if it meets our investment criteria. If it does, we would look to push forward with it, either on our own or in partnership potentially, if we didn't want to take on the whole capital cost burden. Remember, we're debt free, so we could clearly look at doing that if we wanted to maintain 100%. But if it doesn't fit our investment criteria, we would look at some kind of a joint venture or partnering up with someone who could help us make that, and maybe we take a smaller percentage of it. So we'll see. It's an intriguing project and potentially a good asset, but we've got some more work to do to see if it meets the criteria.
Great. And then I guess maybe switching to the other larger project with Gramalote, I know it's sort of your Q1 earnings. You talked about that there was the potential to make it a more robust, project, and you're kind of looking at, sort of ways, to optimize it. Could you just talk like a little bit more about, some of, the drivers that are out there that could, I guess, potentially, sort of support improved economics, and just sort of, your confidence in being able to find those type of opportunities.
Yeah, Gramalote is another, we think ultimately good project in a good part of the world, which is in Antioquia in Colombia. So Colombia is very pro responsible mining. And I think many countries are going to be more pro responsible mining post-COVID when they see what responsible mining has been able to do, not just ourselves, but other companies for their economies, et cetera. So I think there's a real positive opportunity to take what we've done and show people how good it can be for their economy and also how responsible we are in the way we can protect the environment and add social assistance in the program in the countries we are in. Gramalote is we've been working on it for quite a long time with our partner Anglo Gold Ashanti, 50-50 joint venture. So they completed a pre-feasibility study some years ago, and we became operator early last year. And with our great construction team, AGA was interested in seeing us be the operator taking it forward. The idea was to, based on our preliminary economic assessment, the economics suggested that we could build a large open pit gold mine and produce 350 to 400,000 ounces of gold a year, 100% basis, and showed some pretty attractive costs and a capital cost of around $900 million. The updated feasibility study, which we created or completed at the end of the first quarter, didn't show quite as robust economics. There's a few different reasons for that, but we believe, so we had about a 15% IRR, internal rate of return at $1,500 gold. The previous study had somewhat better economics, but we looked at it and we said, we think there's work to be done to optimize the feasibility study. Now, people throw that around all the time, but at the end of the day, there's specific areas here. For example, if you can lower the capital cost, and there's a lot of expensive things that were planned, well, we think they're somewhat expensive in terms of a large tunnel and other things, but we think we can cut back the capital cost and continue and still build a very secure and well-run mine and appropriate mill and mine. So there's that, but also the idea that we have some inferred resources which we can't include in our study because they're inferred, they're not indicated. So we need more drilling. So the potential to add additional ounces. So therefore, if you take the capital cost and lower the capital cost and divide it by more ounces, you're obviously going to have a more attractive project. So we think, it's not that far off. It's got positive economic indicators as it sits today, but we think there's a number of areas that we can do in terms of lowering the capital cost and increasing the ounces. So we're drilling right now to look at doing that. And also we're going to come out now with a revised feasibility study in the first quarter of next year. We're feeling very confident that we're going to improve this thing and it's going to be something we want to build. And our partner EGA so far has been on the same page with us. We both put a lot of time and money into this over time. We're not going to build it just because of that, but we think it's got a good shot to become an economic project that could increase our gold production by 175 to 200,000 ounces a year. It's a potentially good project.
And then I guess, in terms of these, type of projects, we're starting to see some inflationary pressures, just for various sort of materials and consumables. Doesn't seem as though it's hit labor quite yet, but I guess just on the inflation front, can you talk about whether you're seeing anything just in the daily operations, sort of, at the various assets, and then just with developing these projects, sort of, how do you think about, sort of de-risking or just recognizing, sort of the higher prices that we've seen for, steel and other items if you decide to move forward?
Sure. Well, great debate in the world about how much inflation there may be. Some people believe that when there's fears of inflation, then the gold price tends to perform well. But I would say we've seen some cost increases. Labor tends to edge up, but we haven't seen dramatic higher prices in things like fuel to date. And we also hedge some of our fuel, up to 50% of our fuel, to lock in some costs when we think it's appropriate to do that. So, I think overall, the other thing that's key for a company like ours, I think, with what we've done over the years and the way we've done it, the way we treated contractors and fuel suppliers and our labor force, I think we're a very attractive company to work for, is what I hear. So our suppliers, we're one of the largest Caterpillar equipment users in the world. Great relationship there. It's a win-win relationship over many, many years, in fact, decades. So you have those strong relationships. So when you come to look to acquire equipment, or you come to look to other things, if part of it is your relationships with your suppliers. Now, they're not going to give you a cost way lower than industry averages, of course, but in terms of access to equipment and reasonable pricing, because of our reputation and our demonstrated ability to be really good clients to have for these various contracts, etc. So inflation is something to keep an eye on. But once again, there may very well be a corollary. If we see significant inflation in our industry, then normally you do see an improved gold price, which we don't want to rely on that. But our costs are low. So, you know, if we're looking at around $850, $900 an ounce, all in sustaining cost, which is what we're projecting for the next 3 or 4 years. So that may go up a little bit, but at the end of the day, those are very low costs. So that's why we've been able to pay this large dividend and continue to grow the company. So we're very cognizant and very disciplined. If you look at our history and meeting our budgets and our projections, we'll build some inflation into those. But I think we're well positioned to deal with whatever comes our way in that regard.
Okay. And then in terms of geopolitical risks, I think we've just sort of in the news recently, especially in South America, we've seen some sort of talks from governments and parties about potentially raising taxes, sort of royalties. Just kind of share your thoughts, about those risks, and then just at B2Gold specifically, just as you're looking, how do you manage those risks, for your own operations, and then also similarly when you're sort of looking at projects potentially.
Sure. I mean, a couple of points there. I think we've had great success going all over the world between Beam and B2Gold, from Russia to South Africa, which is to far east of Russia to South Africa. It's just probably the furthest 2 points that you can be a part in the world, and many places in between, many countries in between. So the key to our success, I find, is part of this culture we talk about, the fairness, respect, and transparency. But one of the most important things in avoiding political risk or avoiding governments that are disappointed in you, such as potentially higher taxes, et cetera, is by delivering on the promises you make. So if you sit down with the president of a country or other senior politicians, as I have done all over the world, and you promise them that you're going to build a gold mine in 2.5 years, and you're going to do it responsibly, and you're going to create all these jobs, you're going to pay all these taxes, and it's going to be great for everybody, they believe you, partly because you're the CEO of a Western company. Unfortunately, too many companies in the past, I think it's getting better, but too many companies in the past have gone and made promises and not delivered. So you have these politicians and other people in these countries going out and repeating the promises made by the company CEO. They repeat them to the constituents. So I think that's been the cornerstone of our incredible relationships in every country we've been in. Being transparent, being respectful, and delivering on the promises we make. When we say we're going to build a mine by such time for such amount of money, we do it. We've done it time and time again. I think eight times now around the world. So that's part of the equation. But I think the other thing about taxation, we're fortunate in the areas that we've in. We have stable tax regimes in the 3 mines right now, and I think Colombia will be the same, and Burkina Faso. But so if you look at Fekola, for example, so Mali is a very good place for gold mining and has been for decades. Randgold, now part of Barrick, and attest to that. They have great success over decades. Ourselves and other has been very successful. Part of the thing that you have in Mali, you don't have in many other countries in the world, is that you actually lock in your tax regime for the life of the project when you start. So you sign a mining convention with the government, and that means they cannot change your tax regime. Not every country has that. We don't have that in Canada, and many other countries don't have that. That's something people don't realize. So when you look at political risk, there's a case where, yes, we have a 2012 code, which is higher taxes than the 1991 code was, much more, I would call, reasonable levels of taxation. Everybody should win here, but we're locked in under those conventions. A similar situation would be in Burkina Faso if we build Chiakay. But if you look at the Philippines, in fact, I think the Philippines is an example of what I'm starting to talk about around the world, of the fact that the post-COVID opportunity for industries like mining, because everyone now needs foreign investment, and everyone now is going to look back in the Philippine government saying, who were the good actors during COVID, who kept working safely, who kept paying taxes, and who kept supporting the environment and also social programs. And we stand out in other companies as real stars in that regard. So we've already seen the Philippines government reduce corporate taxes, 5%, which you don't see very often. And we've also seen them open up to more open pit mining in the country, and more exploration, and then more open mining in the country. They're moving in that direction. So that's an example of where I'm saying worldwide, we need to talk to the countries that we're in, what you're doing, and saying, look, thanks for your help. We couldn't have done it without your help. The governments, our employees, and ourselves all wanted the same thing. Keep mining if you can do it safely and responsibly. Because of our culture, I think we built up a lot of social licenses that were great, and it's a trust relationship. So we're going to those governments and countries in and saying, well, obviously we want to build more gold mines in your country, and our success attracts others. It always does, because we tend to be pioneers in some of these countries. So they can't afford to really be cranking up taxes now, because if they crank up taxes, then only the highest grade in any country, only the highest grade mines will be built. Do you want 5 new gold mines built, or do you want just the one that has high enough grade and better economics to suffer through higher taxes? So it's really important that these countries realize, don't at this point in time kill the goose that lays the golden egg, because there's lots of potential growth in gold mining worldwide and other mining. I think governments are getting that message, and I think the Philippines is an example, and I think we'll see more of that. So we do a lot of our homework and a lot of our work when we go all around the world on understanding the cultures in the countries we're in, respecting the people. 97% of our employees are of the country that we're in. We have 4,300 employees around the world now. So that's all a big part of that, and working so closely with local and federal governments. Once again, fairness, respect, and transparency goes a long way. So I see a positive future for the gold mining industry, and we're very excited about other opportunities like Uzbekistan. We're drilling there. We're doing affiliate companies doing some drilling in Japan. We've got a really good project in Finland. We're quite excited about its exploration, but these are big, good targets for the future as well.
And then, I mean, we've kind of talked about the sort of the pipeline that you do have. How do you, when you think about M&A, how would you, I guess, sort of rank that when it comes to sort of, the own projects you have, and sort of just the opportunities, that you're seeing right now?
Yeah, I think that we had a great track record of doing accretive acquisitions and then making them even better through exploration. We demonstrated that in all 3 of the mines that we're currently producing it. But it's getting a little tougher because gold prices have gone up. So 5 years ago, when we acquired a company called Papillon, an Australian company, that did an excellent job of drilling off Fekola and doing a feasibility study on the first 4 million ounces. It's now 8 million ounces with our exploration success on top of that. But it was quite remarkable because it was recognized as one of the best gold development projects in the world. Yet there was no competition when we acquired Papillon in a friendly takeover, which is remarkable. The reason was because the investment community was so turned off gold mining companies attempting to build gold mines, because tragically, many companies had done overpaid for acquisitions, done a poor job of construction, pissed off the governments, or did other things. There was no appetite for growth. Yet I've always been prepared in my career to be contrarian. And we said we have a long-term plan to keep acquiring and building good quality gold mines. And we didn't do it. We kept doing that during the Otjikoto in Namibia, and then followed by Fekola. So no competition for now, one of the recognized as a world-class gold miner, one of the lowest gold producers in the world. That's about being contrarian and being prepared to stick with your strategy. But the market didn't like what we were doing at the time. But we didn't dilute our shareholders to do it. We used a sensible amount of debt, which has now been fully repaid, for $600 million to build the Fekola mill and facilities. Yet we've already paid that debt back. So we didn't dilute our shareholders. So we have a long-term strategy. We spend a lot of time on it. And one of the great things of being contrarian is if you get it right. And we've clearly got it right. So now, back to your question, there's much more competition now for the few development projects that are out there. So we're not going to break our habit of a career here, for me, over 30 years, almost 40 years, and start overpaying for things because there's competition. So the cheapest ounces are always the ones you find. We've had a lot of success there. We're going to continue brownfields around the mines, but also some of these new exciting targets worldwide. We're open to M&A, but it's going to have to be a situation where, frankly, we're not going to win a bidding war because other people need growth because they didn't do what we did while we were growing this company when it was a contrarian thing to do in building mines. So we did the heavy lifting when no one else, very few were doing it. So now we'll be looking for special situations. So I'll just give you one example. So the Masbate mine, which we acquired in 2013, that was acquired by taking over an Australian company, CJ Mining, who had done a good job of drilling and a feasibility and actually built the mill. They were a single mine company, and they went up for sale, and we successfully did a deal then when the competition wasn't too hot and heavy. So we did what we thought was a fair deal for the shareholders, but a good deal for our shareholders. And then when the guys first walked in and told me about it, it was pretty high operating costs, close to $900 an ounce. So I said, well, why would you be interested in this? And I said, well, we think we can bring those costs way down. So subsequent to that, we had some quarters at below $500 an ounce. So we took an asset that many others would have looked at and said, well, Philippines, and also, this is high cost. And that's how good our guys are, not just in building mines, but making things better sometimes. So there's an example. So if an opportunity like that shows up, we're not competing with a bunch of other companies because they don't have the ability to do what we do, or they don't see the vision, or they're scared off of the location, or et cetera. We'll look at that. So those are the kind of things. I think there'll be more M&A in the sector. I'm pleased to see that there's been quite a bit because we need less gold mining companies that are better run, better management. We're seeing that, and I think that's quite positive. So we'll pick our spots. But if you look at our growth chart over the last 13 years, it was pretty dramatic from 0 to 1 million ounces. Who would think, given our management team, that we're going to stop there? So one way or the other, I'm pretty confident we're going to continue to grow the gold production of B2Gold, but at the same time, maintaining one of the highest dividends in the sector. So that's the strategy. Pay a very good dividend to reward our shareholders. At the same time, keep some of the cash from operations to continue to grow the company through exploration, potential M&A, and other opportunities.
And then just on your point on sort of the industry needing further consolidation, do you think some of it was delayed, just with COVID and sort of difficulties, accessing various sort of assets and projects? And is that something where sort of as countries start to open up, we kind of see more activity, or do you think again like the higher gold prices just make it more difficult?
That's a good question. I think that there's some of that. I definitely, COVID is a lot of challenges, of course. And normally we would send a full team, to go and evaluate all of our top people, not using consultants, our top in-house people who've done all this, and we would send them to do extensive due diligence on site. But we're in a creative industry, and the deals tend to still get done, and people are using drones and other things and trying to do the best in evaluating something. I think the other important point there is that the regulated environment in which we live today, which sometimes I think aspects of it are kind of overkill a little bit, but overall, the fact of the matter is the vast majority of companies are not going to be trying to pull the wool over your eyes when they look at their project technically. With the public information requirements now, which I agree with, and all the information needed, these, in other words, you've got to check the boxes and you've got to do the work and due diligence, et cetera. But I don't think we're seeing as many, people misrepresenting their project, for example, because that tends to get exposed even by due diligence done on desktop. So at the end of the day, I think you'll probably see a pickup in M&A, partly out of necessity. All of these companies have to continue to grow. We all have to be able to grow. And there hasn't been a lot of exploration money spent for the most part, probably from 5 years ago to 10 years before that, because the sector was so out of favor. So there aren't many, I don't know of another Fekola around right now. There's very few Gramalotes around. There's very few Chiakays around. There aren't many of these. So the competition will get more intense. But we've always found a good way to grow without breaking our rules about very disciplined acquisitions. Also, exploration has been a huge part. We started twice as exploration companies, and look what we've grown into. So exploration this year has a $65 million budget. And these are really good brownfields around the mines, but also exploration targets. We're excited about looking for world-class discoveries, including north of Fekola, as I mentioned, including Uzbekistan, Finland, et cetera. So we're very excited about that ability to grow as well.
Right, and I think we have about 2 minutes left, so maybe just to finish up, in terms of capital allocation, obviously you have one of the highest dividends out there. How do you think about, I guess, allocating capital? Obviously, you want to sort of focus on your various growth projects, but is it something where you want to keep sort of growing the dividend? Is it something you would consider, ever, sort of linking to a gold price or anything like that, or are you more just focused on sort of sustainable increases?
Yeah, some companies have tied the dividend to a percentage of free cash flow, et cetera. We haven't done that yet because we've still been kind of growth mode and evaluating our growth opportunities and looking at our capital requirements going forward. But we set a pretty high bar here with the dividend, just introducing it a year and a half ago, and have increased it twice since then. But we've got to a level now where we think it's a good solid place to be. We want to maintain that. And we'll look, of course, gold prices and other things, that do we increase that as we go forward, and our capital requirements. But we're very comfortable with that level of dividend going forward because, as I said, the strategy is to pay a healthy dividend, but continue to have cash available to grow the company. And we can tap into debt anytime we want, but also have some cash from operations to use for exploration, things like that. So that's the strategy. And I think today, I think the vast majority of our shareholders, who 75% of our shares were voted at our AGM last week, which is pretty remarkable, highly supportive of directors and therefore management of the company. I think they want to see us continue to grow. That's one of our hallmarks. I tell generalist funds, you don't need to buy us because we produce gold. You buy us because we have a big dividend. We're really good at what we do. We're a very low cost producer, and we're good at growing the company. So you don't buy us just because you're a gold bug and think gold's going higher. I think if gold stays right where it is or is lower, we're still going to be a very profitable company that's going to continue to grow and succeed.
Great, perfect. Well, I think with that, we're about out of time. So Clive, again, thank you for joining us today. I greatly appreciate it, and take care.
Thanks for your time. One final point. We didn't get to talk about
Sure.
ESG, our responsible mining report. We just came out with our 5th edition. We're very proud of that. It's on the website, accessible, and all of the remarkable things we do around the world in ESG and our social programs. We're very proud of those. We just won 5 significant awards. It's detailed on our website. If there's a green mining company, I like to think that we're it or we're one of them. So we're looking forward to continuing to grow that important part of our industry.
Perfect. Great. Thanks again.
Okay. Good questions. Thanks for your time.
Thanks.